friends, this is Tony Cañas, and today I want to talk to you about a question that's been coming up more and more often from a very diverse crowd that calls into chatwithtony.com. Should I go work for an Insurtech? And it comes up both from people who are currently in between jobs and also from people who are at a job where they're pretty happy, but they're getting tempted to go explore the Insurtech universe. The way that I think about this question, and what I need people to understand, is that the fundamental trade-off that you make when you leave the carrier world, the traditional carrier world, what we'll call an insurance company, to go to an Insurtech company, the trade-off that you're making is you are trading stability, which is kind of the marker of a carrier career. And I'm not saying that you can't get downsized if you work at a carrier, I'm just saying it's a lot less likely. And you are trading that for the excitement of working at a startup. So it's very important to understand that. And it's very important to understand that in the startup world, it's not uncommon to run out of money. It's not uncommon for startups to go out of business, sometimes with very little notice. I've had friends in the Bay who have showed up to work, not at an Insurtech, but just at a startup, and realized the company wasn't there anymore. It literally stopped existing because it ran out of money. And in that world, it's very common. You just go and find the next job very quickly and keep going. That, for a person that's used to working in insurance where things are a lot more stable, that can be a big shock. So be prepared for that. It's not uncommon to run out of money. And even successful startups, ultimately, for a lot of them, their goal is to get acquired. And when they get acquired, who knows what the new parent company is going to do, how it's going to change, how much of the staff they're going to keep. They might be acquired simply for the technology. You just don't know, right? So you are taking a big gamble, at least in the short term. Here are some questions that I recommend asking yourself to properly underwrite, pun intended, to properly underwrite any opportunity to go work at an Insurtech startup if you're coming from the carrier side. Number one, will my day-to-day be a lot more fun and exciting? Because there is definitely a value to that. If you're working in a sleepy company right now, in a sleepy department, and you're kind of bored of that, does it look like during the interview process and talking to other people who work there and the reputation that this Insurtech has in the market, does it look like you're just going to be having a lot of fun day to day? There is definitely some value to that. Number two, what will I learn in the new role? Super important, because even if this Insurtech doesn't last, or even if you're not happy there, if you learn a new skill set that is valuable at another Insurtech, or even back in the traditional insurance world, you're probably boosting your resume and boosting your career going forward. Number three, how will it look on my resume afterwards? This is similar to number two, but a little bit different. How will it look on my resume afterwards? Like maybe even print an aspirational resume, including a 1-year stint or a 1.5-year stint at that Insurtech you're considering, and float that around to a few friends, see what they think of whether that makes your resume more attractive or less attractive. Number four, and this one's super important, do I have enough insurance experience that I can land back in the traditional insurance world easily if needed or if I choose to? If you've already got 5 or more years within insurance and you already get a good amount of number of calls from recruiters, you've got a good parachute on your back, right? If you got your CPCU, you could easily find another insurance job. You just take a little time. This is less of a risk. What I'm saying is I would be very careful of not doing this very early in your career, right? If you've been at a carrier for a year and a half, you probably don't have enough insurance experience to really get credit for it if you were to come back to the traditional insurance world. In that case, I probably wouldn't. But if you have 5-10 years of experience in the traditional insurance world, you can definitely find the job back in a traditional carrier if you don't like it in the Insurtech world or if it doesn't work out. So you've got a good parachute on your shoulders, basically. Number 5, is the company well capitalized? And that's something you normally don't have to worry about. In the normal insurance world, you don't have to worry about whether the company will run out of money. So do your research, read coverage, or read up all you can about how they've done when it comes to raising money, how much they're spending. I mean, you won't find exact numbers when it comes to their burn rate, but the more that you can underwrite that aspect of it, the more that you have a good idea of whether we're talking about a company that has enough money for the next 18 months, 2 years, whether they might run out of money 3 months from now, leaving you high and dry, so to speak. Number 6, is there an insurance leader who has equal standing to the tech co-founder? So what I mean by that, at the very top, there's likely a co-founder or 2 or 3. Among those co-founders, there should be an insurance person, a person that has significant insurance experience, that is respected within the industry. Those are the best Insurtechs. Abel Travis used to say on his podcast, and I heard it heard also from Rob Galbraith that the word Insurtech is very telling. Half the word is insure, the other half is tech. And Insurtech that only has the tech piece, and they're basically a cool tech toy looking for a problem to solve, a hammer looking for a nail, a tech hammer looking for an insurance nail. That's not the Insurtech you want to go to. You want to go to the one that has both a great insurance person at the top and a great technology person. So underwrite that piece of it. And then during the interview, ask questions on the rest of the team beyond them. You want an Insurtech that has solid insurance people even beyond the leadership, not just solid tech people. And the last question I want you to ask yourself is, what is my opportunity cost? If you are currently a director at a major carrier and you're very unlikely to get downsized, your opportunity cost is significant, right? You're giving up a significant six-figure salary and maybe making a parallel move, or maybe even taking a pay cut for the excitement and for potential equity. So you do need to quantify that. Quantify what is the opportunity cost if I were to stay here, or maybe if I were to make a move within the traditional insurance world, right? And be very clear on what you're giving up in order to make the move. Finally, I want to talk a little bit about equity. The most exciting thing of going to an Insurtech is probably if you're getting equity. And not everybody gets equity. Generally, only if you're at a fairly high level or you're joining very, 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 very early on in the history of this startup, do you get equity. And equity, the proper way to think of equity is like a lottery ticket. Number one, the contract is complicated. It's not just like, oh, here's 2% of the company. If we IPO or we sell, you're a millionaire now, right? No, it is complicated. You have to vest that equity. Sometimes you have to buy that equity at a predefined price. Make sure that you really read the contract when it comes to the equity. Also, be aware that there's 1,700 Insurtechs out there. There's a very good chance that 70, 80, 90% of them, that equity will be worthless one way or another. It is a lottery ticket, yes. There's a small chance that the lottery ticket will pay off and you'll never have to work again, or you'll go and create your own Insurtech with the winnings, or you just put it in the bank and work part-time for the rest of your life, whatever, right? There's a chance that you'll win the lottery, basically. But there's a very, very high chance that you won't. Don't make the decision ultimately on an assumption, or too high an assumption, that equity will pay off, because there's a very, 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 very good chance that it won't. Now, even if it doesn't, if the other questions we talked about, if a lot of those indicate that it does make sense for you to make the move to an Insurtech, then go ahead. By the way, I'm happy to help you think through this problem. Grab some time on chatwithtony.com. I'm happy to give you my thoughts on that particular Insurtech. I'm happy to help you figure it out. Thank you.